All right, so today we're going to cover chapter 5, lesson 2. Okay, and chapter 5, lesson 2 is going to focus on the theory of production. Okay, so when we discuss the theory of production, we're basically discussing a producer. Okay, from a producer's perspective, we're going to discuss how does a producer judge how many employees is enough for their business. Okay, and the production function basically is on page 136 in the book. The graph that we're or the figure that we're really concerned with and that we're going to do all our explaining about is on page 137, and that is graph 5.5. Okay, so if you were to look at this graph, you would tell that here that we have stages. All right, and here this is it shows the production schedule. Okay, this graph is called the production schedule, and it shows basically the number of workers compared to total product, and comparing it to the marginal product, and then finally it gives us all the stages. Okay, when does stage 1 begin, when does stage 1 end, when does stage 2 begin, and when it ends, and then finally when we start stage 3. Okay, so this is called our production function. Okay, so you guys, this is just basically how it is. Okay, so I'm going to get you an
Okay.
image of the production schedule. If you can find that image online for that figure. This is it. We're really just concerned with this graph right here, Maya. All right, this is the one that I really want you to focus with this here. Okay, this graph. I don't know if
Okay.
you see it, but I'm going to share it with you now. Okay, this is the graph that I want you to be concerned with. Okay, so let's go back to our
Okay.
presentation. First of all, the production function basically is comparing the total output. Okay, total output is basically production. All right, how much or how many units does a worker produce, or how many units of output does a worker produce when labor changes. Okay, and remember here the production functions really focuses on the only changing variable, or the changing the variable that is changing, or the factor that is changing, is labor. Okay, while all other inputs are held constant, and by being held constant means that we're not really changing them, they're the same, they are the same. So here, back to this chart, if you look at the first column, what does the first column say? It says number of workers. And what do we see is happening to the number of workers? We could see here
It
that the
changes.
number of workers are changing. And in other words, they are increasing. They're going from 1, 2, 3, 4. So here, out of all my factors of production, the only resource that is changing is the number of labor, or the number of workers or employees. Okay, and
Okay.
this is what the production schedule really compares, or this theory. All right, the production function focuses on the total output. It compares the total output, or by total output we are talking about the number of units of production, or the units produced okay, comparing it to a change in labor. Okay, and the change in labor here means the change in the number of employees. Okay, and how their output changes as they increase or as they decrease. Okay, and again, while other inputs or other resources are held constant. Okay, this is the production function. All right, we have two production periods for a producer. There are two production periods. There is a short run period and there's a long run period. Okay, the short run period it's only marked by the change in the number of workers. Okay, remember it's a short period of time. Okay, so again, we just remember that a short run period or it's a short period of time that the producer is only focusing on changing the number of employees or changing the number of workers, while all other factors such as capital and technology and land, they stay constant. There's no changes in that. However, in the second period, which is the long period, the production function is long enough that it allows your producer to actually change other factors besides employee. Okay, so in the long run, we see a change in other productive resources such as land and capital and technology. In the short run, the only change is in employee numbers or labor. Okay, so for example, if I give you this example and I tell you that I reduce my firm labor, okay, my firm's labor force or my employees, what kind of period are we in? It's going to be the short run period.
A short run.
Right, because this is only marked by a change in the number of employees or the number of
Employees.
workers. Okay, so if I go and I reduce my firm, that means I make them less. Then again, the only factor that I'm really changing is the number of employees. That means I'm in the short run period. Okay, if I
Okay.
go and I hire more employees or I take on more employees, then again, I'm in the short run period because the only factor that is changing is the number of employees. Okay. However, if I tell you another scenario, if I give you a scenario of I increased my labor force, okay, I employed more people, so I decided to build a new factory. So I purchased new machines and I also purchased a piece of land or new land. Okay, so what did I just acquire? How did my business change? It didn't only change in the number of employees, but it also changed in other factors of input. That means I acquired new land. Okay, that's a factor. Okay, I bought new machinery. That is capital. That's a capital resource. So here, my change is not limited only to employment, but it's also I'm acquiring new factors of production. That means I'm in the long run period. Okay. Okay. Do you understand that, Maya?
Yes.
Okay. So again, these are my two production periods that I am concerned with as a producer. All right. After this, it takes us on to now we're going to look at uh, uh, our um, our graph. Okay. So here, back here again, this is our graph. Okay. Remember, this is our figure. It's a schedule. It's called the production schedule. All right. It's made up of you could say that the three main columns here is the number of workers, the number of total product, and marginal product. The third or the fourth column is concerned with dividing the stages, and we're going to discuss what each stage is about. Okay, and what are the criteria of each stage, and how can you tell that you've moved from this stage to this stage? Okay, how could you mark it? Now, for the first column, we said since we're in the short run, we're only concerned with changes in labor. Okay, so here we could see that the number of workers starts from 0 and it goes on to 12. All right, so we see an increase in the number of employees. That means that this company is going to hire. First, they started at 0 employees, then they hired one employee. Okay, so they had one. So they decided to hire one more. So they had two. And they decided to hire another one. Now they have three, and another one they have four, and it continues on to 12. Okay, so the first column is very self explanatory, it doesn't need any explanation. Now, the second column here is called the total product. All right, the total product here is the number of units. All right, so the total product, this is the second column in the production schedule, and it shows the total output produced by the firm. Okay, remember this is a short run relationship because the figure assumes that the only amount of labor varies while the amount of other resources are being constant. Okay, like I just told you, the only change that we see in the production here is the number of employees, while all other resources are held constant. Okay, this is what this figure is. So this is an example of a short run period. Okay, now at zero employees, Maya, how many units or how many number of goods or total product that this producer is producing? Of course, if you have zero employees, your production is zero.
Zero.
Okay, so once you hire one employee, how many total product do we have? How many units of goods does this employee produce?
7.
7. All right. When you hired two employees, now both of them, okay, the two employees working together are able to produce how many units? Or what is their
20.
total product?
20.
20, exactly. So here we're seeing what is happening to our total product? We see
Increasing.
an increase, right? They're producing more. Now, as a producer, I'm not only concerned with my total product. However, what I really am concerned with is my marginal product, okay? And this is what the stages are concerned with as well, okay? So the marginal product is my third column, and I'm going to tell you now what is the third column about, okay? Marginal product is the third column, and by studying marginal utility, remember we said the word marginal means additional, okay, and or the extra output. Okay, so when I say marginal product, what do I mean? I mean it's the extra output that a change in total production that causes a change in total production. That is what that happens when we add one more unit of labor. Okay, what does that mean? Okay, this is a definition, but again, in simple terms, okay, when I worked at zero employees, I had zero production. When I had one employee, I had 7 units of goods being produced. The marginal product is basically the difference between what I produced at zero employees and what I produced at one employee. So that's basically here 7 minus 0, and that would be the 7 exactly. So the first row is always zeros. The second row, how do I find out the marginal product for this one? I would subtract 7 minus 0. It gives me 7. Now at 2 employees, I produced 20 pieces or 20 units of goods. Okay, that was my total product or my total output for the company at 2 employees. Now, what is the marginal product of 2 employees? Okay, it's the extra goods that were produced by the second employee. So at one employee, I had 7. Now that I have 2 employees, what is my marginal? I would do 20 minus 7, and that would give me
13.
The 13.
3.
Yes, you get it?
13.
Yes,
okay.
13. So what about, how do I get the 18 for 3 employees?
I subtract 38 and 20.
Good job. All right, so I do 38 minus 20. I have my 18. So basically my marginal product is the extra amount or the extra units of a product that is being produced by one additional addition of a employee. Okay? All right, you understand that, Maya?
Yes.
Yes. So what's happening here in the in stage 1? Where does stage 1 end? At what number? At 5?
5.
At 5 employees, my stage 1 ends. All right. Why does stage 1 end here? Because stage 1 is called marginal. When I discuss stage 1, stage 1 here is called increasing marginal returns. Where are my marginal returns in this column, Maya? Column number?
3.
3. These are my marginal returns. If I look at my number of marginal returns, I started out at 0, I went to 7 to 13 to 18 to 24 and then 28. Then boom, I go to 20. From 0 to
Decrease.
28, what was I noticing? I was
An increase.
noticing an increase in my marginal returns. Then suddenly, what happened to my marginal returns?
Started decreasing.
They started decreasing. So what do we call stage number 2? Decreasing
Decreasing
marginal returns. Exactly. So again, I'm naming my stages after what? After what's happening
the marginal product.
to my marginal product.
Marginal product.
So on the exam, if I give you this chart and I tell you where does stage 1 begin and where does it end, you need to end it right before the marginal returns start to do what? Start to increase.
Decrease.
Sorry, decrease. You're right. It starts to decrease. Okay, so stage 1 is marked from 0 to 28 because this is the period of time that this producer was able to witness what? To witness an increase in marginal returns. Okay, and this is the best period, or this is the period that is awesome for the producer. Why? Okay, because again, this period shows
He's
that
producing more.
exactly, that each additional worker is actually increasing production. This is a good sign for the producer that his employees are actually working together, they're cooperating. Okay, he is witnessing specialization. Okay, because each employee is working well with their machinery, with their they're doing well in their position, they're learning and they're increasing production. Okay, so here this tells you this is a good sign for the producer. So the producer becomes what? The producer becomes motivated. Okay, and motivated to do what?
To work.
No, it's the personal, the owner. Let's say the owner of a factory, for example, becomes motivated to do what? Becomes motivated to
To
hire
invest in
more.
another company.
To hire more.
Okay.
Okay, because what are you seeing here? You're seeing that every time you hire a new employee, something good is happening. They're producing more. So you become motivated to do what as a worker or as an employee?
To hire more.
To hire more people. And because why? Because again, you want to see more production. Okay, so you're motivated to hire more people, so you continue hiring more employees. Okay, now you start to shift to stage number 2. All right, what's happening to my marginal returns in stage number 2?
Decreasing.
They're decreasing. Okay, so I went from 20, even though my total product is what? Increasing. All right,
Increasing.
so here we see the total product is still going up. Okay, however, my marginal returns are decreasing, and this is what makes it stage number 2. It's called decreasing marginal returns. In the decreasing marginal returns, we see diminishing returns. That means this stage of production where the output increases at a diminishing rate. Okay, and here it starts with the 6th worker. Okay, and it ends with the 10th employee, with the additional 10th employee. Okay, why does it end here? Because what do we notice about marginal returns in stage number 3?
They're negative.
They're negative. So what are we going to call stage number 3? We're going to call it negative marginal returns. We're going to call it
negative marginal return.
Exactly. So if you're ever confused on the test about the name of a certain stage, what you're required to do is pay close attention to what? To the name of the name of the exactly, or what's happening to the marginal product. Okay, what's happening to the marginal product here is that we can tell that it is in stage number 1. It's called what? Increasing marginal returns. Because my marginal returns are increasing, it shows that my employees are working, they're cooperating, they're working well together. I'm witnessing specialization because my employees are being productive and producing more. Okay, now here in stage number two, I call it the diminishing marginal returns because my marginal returns are decreasing. Even though my total product is increasing, but my marginal product is decreasing. All right, what does stage two tell me? All right, stage two tells me, all right, it tells me that my total product is growing, okay, that my second column is increasing, like I said, but you notice a gradual decrease in my diminishing returns, okay? Each additional worker is making a diminishing, but it's still positive, okay? Remember, because the negative here is going to be my stage three. So as long as you're positive, but your marginal product is decreasing, but it's still positive, that means you're at the diminishing marginal returns. All right. So it starts at employee number 6 and it ends at employee number 10. All right. So again, here it shows you that uh, um, again, because again, starting employee number 11 and 12, we already hit stage 3, and this is called negative marginal returns. When you hit the negative marginal returns, here, this is a sign of what it's a bad sign for the firm or for the company. It tells you that you're hiring too many workers. Okay, so would you suggest or would you suggest for the company to hire 11 employees or 12 employees? No.
No.
Okay, because here you're being overstaffed. Okay, this is the term that they use. You're overstaffed, you have too many employees that all of them do not need to be working.
Working.
Okay, all of them, maybe they're getting in the way of each other. Okay, they're interfering with each other's production. They're causing the total output to fall. All right, so stage number 3 is where the marginal product of each worker is negative. Okay, so here, if you subtract 145 from 148, you have a negative 3. If you subtract 135 from 145, you have a negative 10. All right, so here again, it tells you, stop hiring. And most companies will not hire if they're negative, if they have a negative marginal return. Okay, because again, it shows them that the number of workers the firm hires is basically too much. So what is your optimal, or what is the best number of or the best number of employees to hire? Your
5.
optimal, or is to hire from 6 to 10. Okay, 6 being the minimum and 10 being your maximum. Okay, so
Okay.
the best number of employees is to hire from stage 2 minimum. Okay, so again, the number of workers a firm hires will only be found in stage number 2.
2.
Okay, stage number 2, from 6 to 10 employees. This is your best number of employees, or you would hire from 6 to 10 employees. If you go to 11 and 12 employee, this is not a good sign for the company, because again, it shows you that your marginal returns will be negative. Okay, Maya, do you understand?
Yes.
Okay, that being said, for your homework for this section, you were required to answer on page 139. Okay, that was your homework. And you needed to go to page 139. All right, your homework, according to the weekly plan, if you go to page 139 in the book, and you look at the lesson 2 review, there's question number 6. All right, this is what you need to do. You're going to pretend that you're working for a company called XYZ, and they have developed a new product that is selling briskly. Okay, and it's selling, and the company has added several workers. Okay, so imagine you're working for a company and they keep on adding new employment. They continue to hire new workers, and the chief operating officer has asked you whether even more workers should be hired. So basically, he wants to take your opinion. Should they hire more employees, or is this enough? All right, so what you need to do is to create your own hypothetical production function. Okay, schedule. I don't want the graph, the curve. I want a schedule like this. So you're going to create your own hypothetical a production schedule. all right, and for this XYZ company, okay, that is selling this product. And you're going to only give me the schedule. I don't want the graph. I don't want the curve. This curve right here is not necessary. I just want you to do the schedule. And I want you to do a one paragraph, not a one page, just a one paragraph explaining to me the graph, okay, and I will need you to also include the number of employees, the total product, the marginal, and the stages, okay, and the stages.
Okay.
And in one paragraph, I want you to explain to the chief operating officer how many employees should we hire and when should we stop hiring new employees, and explain basically why, okay, so this is what you have to do, okay, explain the schedule. Remember, make sure that your schedule shows the value of knowing each worker's marginal product. All right, so you're doing the three, or actually you're doing all four columns here with the number of workers, okay, showing me where does each stage end and where does a new stage begin. And in one paragraph you're going to direct it as an advice to the chief operating officer on the optimal or the best number of employees. Remember, the best number of employees lies within stage number 2. And when should we cut off hiring, and explain to him why. Okay, is that
Okay.
clear?
Yes.
Okay, Maya, do you have any questions about lesson 2?
No.
Okay. Look out for a video for lesson 1. And please, once you finish your work, email me your
Okay.
homework so I can check it. Okay?
Okay.
All right, honey. Thank you.
Thank you.
Take care. Take care. Bye.
Bye.